Again, joining me is Mike Sundell. Mike, thanks again for taking the time to host us today, and take it away.
All right, Dave. Well, thank you so much for having me this morning, and thank all you, all the agents for jumping on the call today as well. Appreciate it. I know it. Every little bit of time you spend on these webinars, a little less time you have in front of your clients. So hopefully you'll find the next half hour to 45 minutes to be useful for you. Really, what I want to do today is just talk to you guys a little bit about this great product, critical illness, and really how it is a new solution for a problem that frankly didn't exist a generation or two ago. So we're going to talk a little bit about the product and how it functions. I'll talk a little bit about the Assurity product at the very end. But really, the focus today, more so than any sort of product details or intricacies, is just going to be about the genesis of this product, how it came to be, some realities, I think, of health today that maybe weren't so true a generation or two ago that I think drive the critical illness sale, and then some other ideas just in terms of how we can position this product as a solution to a need that right now many of your clients may not even know exists. So first, very briefly, what is critical illness? Oh, looks like I'm in a little deal here. There we go. Okay. Like I said, very simple to explain what this product is, and I think that's one of the beauties of critical illness insurance. Basically, here's how it functions. Critical illness pays a lump sum, tax-free benefit to your client on the first ever diagnosis of any of the conditions covered inside the policy. The original critical illness plan, when it was first designed, covered cancer, heart attack, stroke, and coronary bypass surgery. Now, over the years, as carriers have developed the product and made their own, we have added more and more conditions to the product. And like I said at the end, I will show you guys the conditions that are covered on the two Assurity platforms. But I think regardless of what's covered, the most important takeaway here is that these conditions, again, pay out a lump sum directly to the consumer. And it functions basically like a life insurance policy, only you don't have to die to get your benefit. You know, the trigger is just going to be simply a diagnosis, and that's what we're insuring against, being diagnosed with one of these illnesses. And as you can see on the screen here, this product exists today because unlike our parents, our grandparents, we are surviving these conditions that at one point were basically a death sentence. Great quote I love here from a gentleman, Dr. Marius Bernard, who I'm going to tell you guys a little bit about. He says, you need critical illness, not because you're going to die, but because you're going to survive. And the reason I'm quoting Dr. Bernard today is because he's an actual very, very important person when we're talking about this product. And I think the Dr. Bernard story is one that's worth sharing with your clients. The reason I say that, critical illness insurance is really the only product that I know of that wasn't invented by an insurance company. It was actually invented by Dr. Bernard. Now, if you ask your clients if they've ever heard of Dr. Bernard, I think some of them are going to say yes, but probably the individual they're thinking of is Marius's brother, Christian Bernard. Some of you may be familiar with that name. Christian Bernard is actually a world-famous heart surgeon, and he was credited with the first successful human heart transplant down in South Africa in the late 1960s. What a lot of people don't know about Christian is that his brother Marius was actually in the practice with him. They worked side by side. And Marius oftentimes was kind of in charge of doing the follow-up checkups on the clients that him and his brother were performing these procedures on. And in going about and doing these follow-ups, Marius started to notice a really disturbing trend. And that was 6, 9, 12 months out, right at the very point that you would expect these clients to start getting better, start getting healthy, and getting back to their normal lives. Many of them, their health conditions were deteriorating, some of them even passing away. And, you know, it really drove Marius, it just drove him nuts. It kept him up at night trying to figure out, you know, what is going on here? What are we missing? I know these procedures me and my brother are performing should be working. They should be saving these people's lives. And one day it dawned on him, well, although the procedure itself did exactly what it was supposed to do, at the same time, it put these clients into crippling financial debt. You know, they were missing time from work, their medical bills were stacking up, and as all this debt seemed to come in, it was inhibiting their recovery process. That stress was working against everything him and his brother were doing. So he came up with a revolutionary idea. He said, what if we design an insurance product that could pay out a lump sum of cash, infuse some money into the client's situation before their treatment even begins, as soon as they are diagnosed with the illness, get them the money that they need to get through the treatment and recovery process, and take the whole financial strain out of the equation entirely. So Marius took this idea to a number of different carriers. Finally, in 1984, a little company called Crusader Life down in South Africa developed the first product with them and launched it in that market. And since then, this product has really, really taken off throughout the world. Very popular in some European markets now, very popular in Japan, Australia, really, really marketed heavily now in the Canadian market. And now we're really starting to see this product take off here in the United States. Like pretty much every other market where this product's been designed, kind of initial slow growth, and then we hit that tipping point, and we really see this product take off. And it's really, I think, more a fact of consumer awareness than anything else. And like I said, I think we are really close to hitting that tipping point right now in the U.S. market. So by marketing this product today, I think you can stay a step ahead of your competition and really make sure you're talking to your clients about a vital, vital product inside of their financial portfolio really before someone else has the opportunity to come in and do that. And again, I want to tell you this story, a couple of reasons. First, I think that you tell clients this Dr. Bernard story, and it really does change their outlook. You know, we've seen this in study groups time and time again. You introduce this product to clients, and I think their first thought is, you know, there's so many different insurance products out there. This is just yet another one that some insurance company has designed to get some more premium dollars out of my wallet. And yet, when they hear this Dr. Bernard story, I think it changes their perception 180 degrees. And now they go, you know, from thinking that this is just yet another insurance product to realizing this thing was invented by a doctor because he realized that the insurance world just wasn't keeping pace with the medical community. And that basically modern medicine had created a new problem that the insurance world just hadn't solved for yet. So he took the reins and did that. So I really highly recommend you tell the Dr. Bernard story to your clients. The other thing that I love about the fact that a doctor designed this is since this was his creation and not insurance companies, it really looks drastically different than anything else on the market. You know, I hate to say it, but if one of us carriers had invented this thing and designed it, we probably would have messed it up. And the reason I say that, think about some other insurance products that we have. You know, and imagine if the product looked like this. First, prove to us that a critical illness happened. And then show us how your life was impacted by your medical bills or your time missed from work. And then if you're lucky, you're going to get some of the benefit for which you've been paying your premium on. Now, I know that sounds kind of hard, but just think about your car insurance or your homeowner's insurance. You know, you get rear-ended on the highway. Well, the first thing you're going to have to do is prove that the accident wasn't your fault, but it was the other driver. Then you're going to have to show, you know, what damage was done to your car, and then, of course, what the value of that damage was. You know, you get home, and now your home's been broken into. Well, once again, now you got to prove that your home was broken into. You didn't just leave the door unlocked. Then you got to show, you know, what was taken from your home. You got to prove what the items stolen from your home were, and then, of course, you got to figure out what the value of those articles were. And you can kind of think about, you know, any examples with lots of different types of insurance. But again, with this being designed by a doctor, the function of the claim is so drastically different. And I, again, think that's really the beauty of critical illness insurance. Because basically at the day, here's how it works. You suffer a critical illness that meets the very black and white terms inside the contract, and the insurance company sends you your benefit. And then you, as the client, get to decide how that money is going to best help you, how it's going to make the biggest impact on your life and on your situation. You know, we see time and time again, one great thing about marketing critical illness insurance is that over time, it tends to lead to a superior referral stream. And what I mean by that is we have seen kind of invariably agents that sell 1 or 2 of these policies a year, kind of a steady eddy going along, and then we'll see the spike in production. They go from 1 to 2 a year to 1 to 2 a month, sometimes 1 to 2 a week. And we call that agent every time when we ask them, what happened? How did you turn this on? Did you start a new marketing initiative? They tell us, I started to have my claims come in. And once the client realized that this product did exactly what it was supposed to do, and that the claim scenario itself actually was not a stress-inducing process, it helped relieve their stress, then they truly bought into it. And once they went through that critical illness claim, now they're telling everyone they know, their friends, their family members, their coworkers, almost bragging to people that they were smart enough to buy an insurance product that was there for them when they needed it most, when frankly most people don't even know that it exists. So again, just from a business management perspective, I think selling this product now, down the road it may be a couple years, but you're going to really start to see some nice referrals coming in as a result of marketing this. So I think the biggest thing that we have to get over with clients is, again, if this product's so important, why have I never heard of it before? Why are you, my advisor, the first person that's ever talked to me about this? Why have I never seen commercials about it? Why aren't my friends, why aren't the people that I know already owning this policy? And I think the best way for us to get over that hurdle is to really kind of explain to the client that the realities of health have changed, and that basically there's 3 realities of health that are true more so now today than ever before, that are going to explain why critical illness now, when, again, our parents, our grandparents, a generation, 2 generations ago, why this product didn't exist, because frankly, it really wasn't necessary. Those 3 realities are incidence and survival, but survival with consequence, and then randomness. I'm going to go through all these in order here. So first instance, many people thought this was the key to selling critical illness insurance. We just need to beat clients over the head with cancer, heart attack, stroke statistics, and then they'll realize that this is a very real risk that they need to guard against. But let me ask you guys, if I would have went out and compiled a whole bunch of stats, put them on a PowerPoint slide, and showed them to you guys today, would you have said, wow, Mike, that is really compelling information? Before I saw these stats that you put together, I never knew that a lot of people got cancer in this country. I never realized that heart attack and stroke were very real risks for modern Americans. Well, no, of course not. We don't need to see any sort of a hard stat to make us understand that these things are prevalent in society. Instead of using statistics, why don't we take an example from the Charitable Foundations? You watch TV, especially late night, you'll see a lot of these advertisements for some of the different foundations. I know the Humane Society one, that's a good example. My fiance, she's a big animal lover, and no matter how many times they play that commercial, every time they show that little sad dog in the cage, she starts to cry. And I think, gosh, you've seen this thing 20 times, but yet it still has that same effect on her. Or you watch some of these that are talking about, the children in the impoverished village, and they'll tell you a story. They'll say, here's Joey. For $1 a day, you can make a difference in Joey's life. You can put clothes on his back. You can put food in his belly. And that is so much more effective than if they were to just throw us some broad statistics of how many children are hungry in the world, because that personal story, that's what compels us to take some action. So I think just like those charities, what we really want to do is tell those stories, and even better, draw the stories out from the clients themselves. Get them to tell us about the people in their lives that they've seen battling cancer, heart attack, stroke, and the financial implications of going through those illnesses, going through the treatment, and going through the recovery process. And at the end of the day, incidence alone, it really means nothing. Because I can tell you 100% of us on the call today are going to have a heart attack, or we're going to have cancer right now today. But that's really still not enough information to know that we need to buy a critical illness plan. Because if we all died this evening, hopefully we already have the right insurance plan. Hopefully we already have some life insurance on ourselves. So that leads us really into the second reality of health, and that is survival. but survival with consequence. And again, this is a problem, it's a great problem that the medical community has created for us. We have earlier diagnosis of these ailments. We have better treatment options than ever before. And as a result, things that were once triggering death claims are now things that we're living through. And I think I have a great story to share. Just one example of how maybe even 15, 20 years ago, this individual that I'm about to tell you about would have been a death claim, where now, thanks to where we're at with the medical world, he survived, and now he's doing better than ever before. You know, you look at the numbers on the screen, 4, 34, 58, 56, 30. Especially if I got that 100, I'd ask you guys what that looks like. Many people would say it kind of looks like some lottery numbers. And I would argue it's a bad luck lottery is what this is. Basically, 4 years ago, a 34-year-old male bought a $100,000 critical illness plan. 58 days ago, he went to the gym, got on the treadmill, was warming up, suddenly collapsed on the ground, went into full cardiac arrest, heart stopped completely. 56 days ago, he awoke from the hospital from a medically induced coma. And 30 days later, he received his critical illness check of $100,000. So this guy, very healthy, fit young man, he was at the gym, like I said, warming up, bam, hit the ground. Luckily for him, instantly, 15 other people in that gym pulled out their cell phones and called 911. Paramedics were on the way within a matter of minutes. Next to him, luckily, again, there was a registered nurse that was warming up on her treadmill. She instantly jumped off, went and grabbed the defibrillator off of the wall at the gym, and resuscitated him on the scene. Paramedics arrived. They got him to the hospital, and they basically wanted to make sure that they preserved his organs because they didn't want his body to go into shock as they resuscitated him. So they intentionally cooled his body and medically induced a coma and kept him there for 48 hours, woke him up 2 days later, keeping all of his organs well intact and healthy. So like I said, no death claim triggered. Instead, this guy has made it back and he's doing better than ever. But let's just think about a couple of the factors here in this exact case. You know, first off, the cell phone. You know, 15, 20 years ago, every 8-year-old didn't have their own iPhone. Every single person on this planet didn't seem to have a cell phone. So there's one thing right there, the cell phone. The defibrillator. You know, I know just 10, 15 years ago, you didn't see those on the walls of every single gym in America, where now it seems like no matter what gym you walk into, you're going to find one of those there at the gym. And then this idea of intentionally inducing a coma and cooling the body, it's almost like science fiction sounding, just things that you know, 20, 30 years ago weren't available. So any number one of these scenarios, or one of these factors, let alone all three of them, if they weren't in place, very likely this gentleman would unfortunately have passed away. But thanks to modern technology now, the game has changed. And now when we were talking about death claims, now we're talking about things that we're surviving. But unfortunately, that survival has some significant financial costs. And without that death claim check coming in now, that's why we need a new solution to the problem. So it really is. It's the old planning versus the modern planning. Old school planning would have told you the right product for cancer, heart attack, stroke, that's life insurance. But now the new plan, modern planning, we like to say, the right product for these ailments is life insurance, but it's life insurance and critical illness protection. And you know, if you guys don't believe me, just go and look in the obituaries. That sounds kind of like a weird thing to say to back up my point here. But words don't lie. You know, I think for every without warning or suddenly or unexpectedly, you guys are probably going to find 4 or 5 after a long and courageous battle, surrounded by friends and family. You know, thanks to our team of caregivers. And in lieu of flowers, please donate to the American Cancer Society. So my point here is that even in those worst case scenarios where these illnesses ultimately are getting us, we are surviving longer. Treatment is prolonging our lives, or we are battling these things. Whereas, again, a generation or two ago, more often than not, they were getting us quickly. So now let's get, and again, survival with consequence. I think the other thought there is don't oversell the survival. The consequence is equally important. We know an advisor that likes to talk about the magic pill. He says, someday I hope that every client I've ever sold a critical illness policy to will be able to come into my office and say, okay, I'm going to cancel my critical illness because I don't need it anymore. Because basically at that point, medical technology will be, we'll call it the magic pill. You go to the doctor, he tells you have cancer, well, here's your pill, you're cured. There won't be the out-of-pocket financial or emotional ramifications of the treatment and recovery process that we have today. But let me ask you, does anyone think we're going to see that in our lifetime? Most likely not. So that's why it's survival with consequence. Finally, let's talk about randomness. I think this is a vitally important part to the critical illness sale, because if we cannot make our clients understand that these ailments can strike anybody at any time, the first people that are going to want this product are frankly going to be the unhealthiest and those with the worst family history, those that are going to be almost impossible for you guys to get through underwriting. So we want to talk about how, no matter how healthy you are, this is something that can strike at any time. If I were to show you guys two twin brothers, one of them was, just a fit, perfect health, never drank, never smoked, and the other brother, liked to have a little more fun, liked to eat fast food, didn't take good care of himself, smoked too much, drank too much. If I were to ask you, which one of those brothers really needs critical illness insurance? So we could probably argue both of them. But at the end of the day, out of those two, I think the healthy brother needs it even more so than the unhealthy one. And the reason that I say that is because the healthy brother, when he goes through one of these illnesses, that's the one that's more likely to survive the critical illness because he's taking good care of himself. We like to say that this product is specifically designed for the healthy. Unfortunately, I hate to say it, that unhealthy brother, he probably needs more life insurance. But I promise you, you guys probably all know stories of people that were probably the last ones in the world that you would have expected to be diagnosed with cancer, or the last one in the world that you'd expect to have that heart attack while warming up on the treadmill or after running the marathon. But no matter how great we take care of ourselves or how good we take care of our bodies, there's no way to mitigate away the risk of these illnesses. So I'll share you a personal story. My mother is one of 7 kids, a nice big Catholic family back in St. Louis, and they always like to joke. Most families have a black sheep of the family. Well, with my mother and her siblings, they always said they had a white sheep of the family. 6 kids that were bad, and then 1 that was just invariably good. My Aunt Carla, the youngest of the 7 kids. And Aunt Carla has always been the responsible one, always made the good decisions. In her life, financially, health-wise, everything, she's done the right thing. But guess what? This last week, she just had surgery to remove cancer. So of all the people that we thought would ever be of those 7 kids being diagnosed with cancer, she's now the one going through it. Luckily, the surgery went well, so she's doing great. They removed her thyroid, and it sounds like she's going to be okay. But again, the point here is that just because she made the right decisions in life, it didn't keep her from getting stricken with this unfortunate disease. And we could say you're healthy, it's not going to happen to you. Here's just a couple of popular examples that I think most clients will know. Patrick Swayze, Sheryl Crow, Mario Lemieux, one of the greatest athletes of our time, world famous hockey player. Ask your clients if they think they're more healthy than Mario Lemieux was, because that didn't keep him from being diagnosed. And I think, you start to tell these stories, your clients are going to say, yeah, it's funny you say that. I had two uncles, and the one that didn't smoke is the one that got the lung cancer. Everyone has those stories. The captain of the basketball team. So again, we really want to sell this product as this is something that you need because you're healthy, because you're taking such good care of yourself. And no matter how great you're doing, how many right decisions you make, these things are random and they can get anybody at any time. And again, because you're so healthy, because you've been making those right decisions, you're the one that's more likely going to survive this thing. As opposed to it being a death claim, it's going to be a blip on the radar. It's going to be something that's going to derail you for a bit, but you're going to get through it. You're going to get back to the life that you were living. But these critical illness funds, they're going to help you get back on track. So again, those three realities of health are incidents. These things are happening a lot. The good news is we're not dying nearly as much as we used to, but our lives are still hugely, hugely emotionally and financially impacted. Survival with consequence. And more often than not, it's the healthiest person that you know, because these things are random and they can strike anybody at any time. Next, I want to talk a little bit about, okay, well, now we've kind of positioned this need, these three realities of health have driven the need for the product, but how is this lump sum of cash a solution? And I think we want to be careful here not to sell into a mirror, because at the end of the day, this thing is so versatile. We have seen this product positioned to cover so many different needs, but I think it's a trap if we start telling the clients how these funds need to be used. As opposed to that, I think it's much better if we can draw it out from them and ask them how they think this money is going to make the biggest difference in their life. Those people that they know, how would the cash have changed their situation? We like to use the analogy of a luxury car. Say Dave and I both went in to buy a new Lexus, and I wanted it because I wanted something that was going to, really get up on the highway. And Dave wanted something that was going to be safe for him and his family. Well, if I went in there and that sales rep was just telling me about how highly crash test rated this car was and all the safety features, completely missing the boat. And likewise, if Dave walks in there and all he's talking about is, how many horsepower and how fast will it get up from 0 to 60, well, once again, I think he's going to miss out on the sale, because basically what that sales rep is doing is selling into a mirror. Well, much like that, if we, rigidly tell this client how they need to use these funds, yeah, we might stumble onto the right reason, but we're just as likely to miss, what really going to be the important triggers from them. So again, instead of telling them how to use these funds, just ask them, do you have any thoughts about how people have used these benefits in the past? And maybe they're going to tell you, that cover your deductible, cover your co-pays, maybe help to make up for some of the lost income, maybe having the ability to get the hotel room right beside the Mayo Clinic or MD Anderson and not have to drive 2 hours back and forth to receive your treatment. Because again, the beauty of this product is this cash goes into the client's hand, and if they have the ability now to use it however it's going to make the greatest impact for them. But I will tell you what, no matter what we use these funds for, here's what this product does. It gives people options. It gives them some control at a time when they feel like they have no control. It gives them choices. That's the biggest one for me. It gives them choices now and a feeling of independence. And of course, the reason Dr. Bernard invented this thing to begin with, it reduces stress. And I will tell you, I think a big trigger right now with this product is just looking at the healthcare market today. I think that we are kind of at a time in history here where people feel less of a sense of control or choice in their healthcare and how their healthcare is managed than ever before. So if we can show them how you can regain some of that control back, how you can now give yourself more choices when you're battling these illnesses, I think that's what's going to really motivate people to seriously consider buying a critical illness plan on themselves. Now here's just a partial list. And again, I think the great way to go about it is let's just show the client all these different ways, and let's find out which ones they attach value to. And then whichever ones we kind of identify, that's how we want to target the critical illness sale. Uncovered medical costs, alternative treatment, supplementing DI benefits, funding that career change. Many times you go through one of these illnesses, you kind of have a different outlook on life. And now to have these funds again, to have the choice to move into a new career field, if you feel that that's what's going to be best for you. That's another way we're seeing people use these monies. Mortgage, in the overseas market, I told you guys about some of the other countries where this product's so popular. It's really driven a lot of those markets, particularly in Canada and Britain, as mortgage protection. Is it going to reduce your client's stress if they're battling one of these illnesses? and they know they can cover their mortgage payment for the next 6 months? You know, it's sad, but despite all the economic turmoil of the last few years, the number one cause of bankruptcy in this country is still medical debt. So I think, and home foreclosure as well. So I think, again, if we can cover that need with this product, just one more way that we can show these clients how remarkable this product really is. You know, like I said, the uncovered medical costs, it can be a huge trigger or it might be a non-starter, depending on the experience of those that you're talking to and those around them. You know, I think if you talk to a client and all you're positioning this thing as is a way to cover your out-of-pocket medical costs, yeah, if they know someone that has struggled with those, it's going to be a big driver. But if not, then I think that you're going to kind of miss out on the sale if that's the only way we're offering this product. So, again, a great question to ask your clients. Do you know anyone who struggled with uncovered care costs? Do you know anyone that's had difficulty paying off their hospital bills, their deductibles, their copays? If they tell you yes, then let's go ahead and go down that avenue. Let's position this product as a way to cover those expenses. But, you know, if they tell you no, you know, yeah, my friend John down the street, he went through cancer. He didn't seem to really struggle too much at all with his health insurance costs. Well, then I think that's when we want to kind of reposition and talk about all the other ways that we're seeing this money used. But I'll tell you, we have, before I get into the product stuff here real briefly, I want to share with you guys what we call the 4-question critical illness meeting. And time again, agents that I have seen that have sold a lot of this product, they ask some sort of a variation of these 4 questions. And here they are. Do you know anyone, or even better, who do you know? Who do you know that's had cancer, heart attack, or stroke? And the thing here is no matter who you ask that to, I guarantee you they're going to have at least someone, probably multiple people that they are close to that they have seen battle these things. Then you ask them, did they plan it or was it unexpected? Kind of a rhetorical one there, I think. Most people don't ever plan on getting these. Really no one plans on getting them. But this question is driving out, again, that thought of randomness and unpredictability. Yeah, you know, my brother Tim, one day he was fine, and then the next day went to the doctor and his whole world was turned on its ear. Was there unplanned emotional or financial strain on the household? And that word emotional here I think is key because, like I said, occasionally you're one of those cases where financially they did make it through without having to file for bankruptcy or without having to go into significant debt. But even in those cases, I think the emotional strain obviously is going to be severe because the money isn't the first thing that you think about. And then finally, would cash have helped? Your brother Tim that you're telling me about, if he had came home that night after he went to the doctor and there was a check for $50,000 waiting on the kitchen table, would that made a difference? Would it have helped the scenario? Not would it have made everything okay, because frankly, survival, that's our first immediate thought, but would it have helped? Would it have given him some more choice, some more independence? Would it have reduced his stress to know that that money was going to be there while he was going through the treatment and recovery? So with that now, I do work for a surety, so I better spend just a couple of minutes talking about our product in particular. We have 2 really strong products here, a simplified issue as well as a fully underwritten. So I'm going to talk about each of them in turn. First, our simplified issue critical illness. This one, it's going to be for the smaller benefit amounts. Ages 18 through 64, go as little as $5,000 in monthly benefit and as high as $50,000. Now there's 12 covered conditions in most states. I will tell you Washington, which I'm sure some of you are calling in from today, is somewhat reduced. There's a few illnesses they did not want us to cover on here. So there's actually 9 conditions out there. But most of the states that we're at, we're going to have 12 conditions. Product is guaranteed renewable to age 75. So at age 75, product is going to terminate. Number of riders on here, there's a return of premium rider. If you tack that rider on, it's an additional cost rider, but the client will get all of their money back when this policy terminates at age 75. And if they need to terminate it a little bit earlier, we can do a prorated return of premium, based on how old they are and how long the product's been in force. Disability waiver of premium, obviously waive the premiums, while the client's disabled till they get back to work. Accidental death benefit rider, we can tack on up to $50,000 of accidental death coverage. I think where that would fit is when you're talking to the younger clients. Maybe you can't get them to buy true life insurance. Well, let's get you a critical illness plan and at least get you a little bit of accidental death coverage. And then finally, spouse rider and children's rider. That spouse rider, we are going to underwrite it just like we underwrite the base insured. Just going to save that second policy fee by putting the rider on the same plan. And then the child's rider, basically two options here. $5,000 or $10,000 of lump sum benefit, covers all the same conditions as we're going to have on the adults. And the one rider is going to cover all the kids in the house. Whether you got one kid or 10 kids, that one same price, going to get all the kids covered. Now I want to mention one other thing on that return of premium rider. As I mentioned, that's an additional cost rider that if we add to this policy, will pay the client themselves their premiums back at age 75. But whether or not you have that rider attached to this product, already built into every single critical illness plan that goes out the doors here at Assurity, we have return of premium upon death built into the plan. So in other words, your client dies for any reason while this policy is in force. Say they get into a car accident and die. All the premiums they've been paying into the plan, minus any claims that may have already been paid out, are going to go on to their beneficiary. And again, that is completely separate from the rider that you're seeing on the screen here, which will pay the cash back to the client themselves if they make it to 75 and never need to use the product. So again, return of premium rider, additional premium, get them their money back at 75. But even if you keep that thing off of there, we just write the base plan with no riders on it, return of premium upon death going to be built in to the product. Here are our 12 covered conditions. I will tell you the 3 that are not on the Washington plan going to be major burns, coma, and paralysis. The DOI took the opinion those are not critical illness, so we cannot have them covered on a critical illness plan, unfortunately. Now, you can see that we have these conditions broken up into 3 separate categories. Category 1 is going to be cancer, invasive and non-invasive. Category 2, the heart attack, stroke, coronary bypass. Category 3, we have all the other conditions, kind of the miscellaneous or other, that we thought were important to offer coverage on, and we've lumped them into the same plan. Now, the reason we have 3 categories here is that the client can collect their full lump sum benefit up to 3 times. So let's say they're diagnosed with invasive cancer. They have a $50,000 plan. We send them a check for $50,000. Then a year later, they have a heart attack or a stroke. We're going to send them a second check for $50,000. And if they're really unlucky and they need a major organ transplant or one of those other conditions in the 3rd category, we will actually send them a 3rd check for $50,000. Now, we haven't had anyone yet that's been that unlucky. I mean, that would be the perfect storm of misfortune. But now we're starting to see people that are having that second payout. So I think it is an important thing to note here, the fact that whatever amount we underwrite you for, take that amount times 3, and that's the maximum that this policy could pay out. Now, 2 other things I want to point out on this. 1, to trigger an additional payout, we need to have these illnesses diagnosed at least 180 days apart. Otherwise, we're going to pay out the first claim. So the example I always use, you go to your doctor, he tells you you've been diagnosed with cancer. Right there, that freaks you out, and you have a heart attack in his office. Well, we're just going to pay out the cancer claim, not the heart attack claim. The other thing that you might notice on here, a couple of things don't pay 100% of the benefit. Non-invasive cancer or cancer in situ, basically that means it's any form of cancer that is not metastasized, as well as coronary bypass, angioplasty. These don't pay a proportion of the benefit because, frankly, they're not so not so exhaustive to get through the treatment and recovery. Not going to see a significant out-of-pocket strain from them. But the client is not going to lose out on that pool of money by receiving the partial claim. So in other words, let's say we have a $50,000 plan. Client has an angioplasty. Well, we're going to pay out 10%, that $5,000. But then down the road now, they have a stroke or a heart attack. We're going to pay out the remaining $45,000 before we close that category up. So no matter what, they're always eligible to receive the full $150,000. Here's a copy of the app on here. Very quick, very simple, straightforward app to get through. We have a one-page health question. We do have a family history question on there as well. But these are basically knockouts. You're going to know if you get a yes to one of the questions in the health section, let's not even submit it because it's going to be likely declined. You can always call into AIM and they'll screen them for you to let you know if there is any way to get them through. But for the most part, these are going to be knockouts. We're going to use this short format along with a script check and an MIB. Those are going to be our main tools for the underwriting. Can order telephone interviews on these. If you do sell one of these over the phone to your client, we are automatically going to trip a telephone interview. So just let them know, hey, a surety is going to be calling you in a couple of days to review some of these health questions. Call won't take long, but just be ready for it. We have a quick quote calculator, which I'll make sure that Dave gets out to all you guys. What's really nice, you could use this calculator to quote the Simplified Issue critical illness, and you're not going to need to get into a surety secure portal to do that. You could take this page and just save it as a bookmark and get in, and in the course of just a couple of minutes, you'll be able to run a nice quote. Now, if you want a full illustration that I think is a little bit better to show a client, you're going to want to get into the secure website, or even better, just call AIM and have them, have them run it for you. But this is a nice, quick way that you can get a price point for your client, again, without having to get into any sort of a secure portal. Now, briefly, the fully underwritten plan. Same issue ages, 18 through 64. We're going to cover anywhere from $50,000 up to $500,000 in lump sum benefit. 21 covered conditions. Again, unfortunately, and Washington has stripped it down a bit. Actually, 14 covered conditions up there, but really all the other states have 21. This one, instead of terminating age 75, is guaranteed renewable for life. Now, I do want to warn you, the benefit cuts in half when the client hits 65. So we write, say, a $100,000 CI plan on a 50-year-old. Well, once they hit 65, it's going to jump down to a $50,000 plan. Premiums are going to remain level, but the benefit's going to cut in half. And I know some people, the reason that we do that, when we were pricing this product, we found the incidence of these illnesses really skyrockets when you get into your upper 60s, your 70s, and your 80s. And to price a product that paid a level benefit for life, it was just going to be out of the price range for too many individuals. So our solution, of course, didn't want to increase premiums on people at 65, or these would all lapse. So our solution was, okay, well, we're going to keep the premiums level, but we'll reduce the benefit by 50%. That way we can keep this thing in the affordable range. And I think one way to talk to the clients about this is, we're seeing these funds used for a lot of different things. But one of the main uses for this money, frankly, is to replace lost income. And now, hopefully, by the age of 65, you're at or near retirement, and the need to replace that income isn't going to be so great. So we can use the other half of those funds for all these other things that we talked about today and more for the client. You can see all the same riders are available with the exclusion of that return of premium rider. The reason that's not on here is that this product doesn't terminate at 75. It's good for life. Now, I will point out yet again, this product has return of premium upon death built into it. So again, the client dies for any reason, we're going to get all those premiums minus any claims that have been paid out back to the beneficiary. So you're thinking about there's really no way to lose on this product. The only way to lose is if you let it lapse. Hopefully you buy it when you're 20, you live to 100, and over those 80 years, you never go through one of these illnesses. You're lucky enough to dodge them. Well, even in that scenario, all those premiums that have been put into this policy for the last 80 years, they're going to go on to your beneficiary. Like I said, the only way to lose really is to let it lapse. Here's the 21 covered conditions. Again, same three-category approach that I talked about. Some additional things that you didn't see on the Simplified Issue. Accidental loss of speech, benign brain tumor, blindness, deafness, loss of limbs, motor neuron disease. People ask me what that is. A couple things qualify. The one that we see the most claims on is ALS, Lou Gehrig's disease. Then occupational HIV infection. That's a big one, I think, in the physician market. Still a real fear out there of getting stuck with an infected needle and contracting the HIV virus. So if you're working with doctors or nurses, I think you definitely want to talk about the occupational HIV. There's also a couple things in that category too that we have added on that here. Aortic surgery, heart valve replacement. Those are things that you didn't see on the Simplified Issue product. And again, you'll want to look at the state specific because in Washington, a couple of those things in that third category are not going to be covered. As far as the underwriting, Simplified, like I said, it's short form, accept rejects, have a 4-day service guarantee on it, electronic applications available, fully underwritten, a little bit more like long-term care underwriting or preferred life underwriting, long form application, expect APSs potentially. If we're going for a large enough benefit amount, we are going to need to do a paramed, and we can do both of these products on the electronic application. For the fully underwritten, I highly recommend. We have an underwriting pre-screen that Dave can get you as well, and this is going to be a great tool when you're thinking of someone for the fully underwritten product. Go through this very short one-pager with them. Just take probably about 5 minutes to answer these questions, and you can send it in to AIM, and they'll do a pre-screen for you guys and find out just exactly how anything is going to affect the underwriting process based on the information inside of this plan. So very, very useful tool for you. With that, I would like to go ahead. I'm going to hand it back over to Dave here, and if you guys have any questions, definitely take the next 10, 15 minutes here to answer them.
Sure. What I'm doing now, thank you very much, Mike, by the way. I'm unmuting everybody. If you have me on a speakerphone, would you please take me off speakerphone because we're getting a lot of feedback, especially on smartphones. Otherwise, I'll have to mute everybody off. But the lines are now opening up for any questions you may have of Mike about critical illness overall or a surety. Go ahead.
Yes. Do you hear me?
Yes.
Yes, we hear you.
Yeah. Is the product available in California?
It is available in California. Both of the products we talked about today are the fully underwritten is available, but it's not available on the electronic app. And the other difference, I know in California, the fully underwritten does not have that occupational HIV coverage. But everything else is going to be just like what we see in the other.
Thank you.
Sure.
Any other questions out there? Okay, one more plug. Actually, a couple more plugs.
Oh, yeah, I have been.
A week from today, we're going to be doing a webinar on Mutual of Omaha's Guaranteed Universal Life with a chronic illness rider. And then on the 28th of July, a Monday, at the same time, 9 o'clock, we're doing a live video stream from Assurity with Assurity's Ken Smith, along with our own Dennis Reiner, on the critical steps for critical illness training. So mark your calendar for those two events coming up. If there are no additional questions, again, Mike, thank you very much